So I think it kind of goes against this meme or narrative that was circulating earlier this year that Bitcoin treasury companies are going to cause the next bubble. They could prevent the next crash. I also think that it's a signal to individual retail investors that there is a gold rush happening. Everybody who participates in it will benefit. We're all going to win together.
Hey everybody, today on the Treasury Orange podcast, we've got Pierre Rochard. If you've been around Bitcoin for a while, he needs no introduction. He's famously known for his early Bitcoin writing, especially an article titled The Speculative Attack, which I'm sure we'll revisit today. He's currently the CEO of the Bitcoin Bond Company, and he was recently named to the board of directors for Strive. Pierre, welcome to the podcast.
Hey Tyler, thanks for having me on.
Absolutely. So, Strive did recently announce their board of directors. It's kind of a who's who in the Bitcoin world, Pierre. Why did you decide to join their board, and what kind of makes Strive's mission unique compared to other firms that are in the Bitcoin treasury space today?
Yeah, absolutely. So I think that whenever I have an opportunity like this, I try to find reasons to say no and essentially, ask the tough questions. And what I really felt like interacting with Matt and the whole Strive team was they didn't shy away from the tough questions. They answered them directly and with a very reasonable thought process. And so that to me was definitely a sign that it would be a good idea to work with the Strive team. And then in the role in particular, so I come from an accounting background. That's what I got my bachelor and master in. And when I was in school studying about all the different concepts in that area, the one that I found particularly interesting was um, something that harkened back to a story that was kind of a big deal when I was younger, which was Enron. And I remember I was reading the Wall Street Journal and like learning about this at the time. And one of the outcomes of that was the passing of the Sarbanes-Oxley bill and the improved internal control environment for publicly traded companies that really have a really special importance in capitalism and a particular risk, which is this problem of agency principal alignment. And so you have the principals for a corporation are the shareholders, right? People who contribute capital. The agents are the management team. And you want to make sure that management team is doing what's in the best interest of the shareholders and not what's in the best interest of management. Now, in ideal times, both of those align, right? And so that's, you want to have incentive alignment in a corporation. And so what keeps that, or at least governs over that process, is a board of directors. And so when I was learning about kind of the checks and balances of a corporation, I thought that was really a unique aspect of shareholder capitalism. And so being invited to join a board of directors, on one hand, it's like it's a tremendous honor, but it's also a huge responsibility. And so it comes with criminal and civil liability, right? Because ultimately you are a fiduciary for the shareholders. And so it's not a role to be taken on lightly. And as part of that, I also really wanted to be involved on the financial accounting side. I'm a huge accounting nerd. And so I will be and am chair of the audit committee that actually works with the external auditors, the internal audit team, and really the whole executive team, and to make sure that we're doing things by the books. And I think that when I look, we can talk about speculative tech. This is a thesis I've had for more than a decade now, and we get to see it happen in real life. I feel a special responsibility to be involved, and to be involved in a very particular capacity, which is to make sure that we're all doing the right thing, and that we're doing right by Bitcoin and doing right by the shareholders. And I can't think of a better team to do that with than the Strive team. They've really, even today's announcement with the transaction with Semler, they've exceeded my high expectations for them. And so I'm very proud of them, and I'm very grateful for the huge amount of work that they've put into building up Strive over the years, because we can talk about the history of the company, which was to advocate for shareholder capitalism. And so, in various capacities as an ETF provider. So, yeah, I'm happy to go in any direction, or I can keep rambling.
Yeah, no, that sounds good. Thanks for sharing that, Pierre. I kind of wanted to know your journey to Strive and the board of directors. It sounds like they're really kind of tapping on not only your Bitcoin bona fides, but also your accounting background. That's cool to hear that you're chairing the accounting committee. So I think we'll get into a little bit of the Strive management team and their vision. But first, I guess at the top, we kind of got to talk about the transaction today, as you alluded to. So Strive, it's been announced that they're going to be acquiring Semler Scientific in a stock for stock transaction. I saw numbers thrown about at around $90 a share for Semler, and that shares would be redeemed 100 to 20. Do I have that right? But let's talk about that. This is an interesting way that Strive's going to be able to add some Bitcoin to their balance sheet, some 5,000 Bitcoin, right from the jump. So yeah, the floor is yours.
Yeah, just to clarify that the fixed ratio is of shares, right? So it's 21.05, I believe, to every one share of ASST of Strive. And so the dollar price, that is a variable that is a result of calculating based on current market conditions. And so that's outside of our control. What's within our control is that share ratio that we've negotiated that increases the Bitcoin per share for Strive's common stock. And so when you think about how to operate a Bitcoin treasury company, I think that first we have to be clear that the management, in order to be aligned with all the shareholders, the management has to be trying to maximize sats per share over the long term. I think that's how you get to durable long-term value creation. And because if you're not increasing the sats per share, I don't really see how the common stock could ever outperform Bitcoin. And if you're not using Bitcoin as your unit of account, I don't know what to say to you. I guess you got to go back over 10 years of podcasts and tweets from myself to use your Bitcoin as your unit of account. So that's where I think that this transaction really makes a lot of sense, is increasing Bitcoin per share for Strive's common stock. And then arguably just as important is the increase in scale. So I think that when we think about what a Bitcoin treasury company can accomplish with having a greater collateral base from a credit perspective, I think it's really important to consider the economies of scale that come with having a bigger balance sheet and the combined forces of Strive and Semler Scientific.
Yeah, that sounds good. And that really is kind of the whole ticket with Bitcoin treasuries, right, Pierre, is to outperform Bitcoin. If you're using Bitcoin as your hurdle rate and your unit of account, why else are you spinning up a Bitcoin accumulation machine if you can't outperform Bitcoin itself? Can we talk a little bit about the management team that Strive has built? As our viewers will know, we did a video profiling Strive. We talked about its founding from Vivek Ramaswamy and how he was just a real pro-capitalism outlook, kind of anti-ESG, maybe not anti-ESG, but more pro-capitalism, and maybe a consequence of that is kind of eschewing ESG that has been adopted by a lot of Wall Street, especially at the beginning of the COVID era. Can you talk about Matt Cole, who's the CEO, and the rest of the team they've kind of built up?
Yeah, absolutely. So we can start with Matt Cole, our CEO. He was previously a portfolio manager at CalPERS, which is the pension fund provider in California that operates one of the largest fixed income funds. And so he was a fixed income portfolio manager there. He worked his way up into that role, and I think really demonstrates two things about him. One, he's an excellent leader, and he's I'll attest to as a great magnet for talent. And so, and it really, because when I interact with him, and when we talk about issues, it's clear that he got the right intentions, and he's got a lot of horsepower in terms of intellect. And so um, there there's that. And then the other part of what that demonstrates, that he worked his way up to becoming a portfolio manager, 'cause that's a kind of a really important seat in an institutional financial context. He has a lot of knowledge of kind of the technical aspects of fixed income securities and of that market, and thinking about liquidity, kind of the different market players, and all that comes with that. So he was actually hired by our CFO, Ben Pham, now CFO. And Ben comes from a hedge fund background. So he is very in tune with capital market. And really, when you look at it, I've also gotten to meet folks who are not in the C-suite, and who, are at other levels in the organization. They've actually attracted talent top to bottom in terms of their expertise in capital markets. And so I think that really is really important when you're doing the Bitcoin treasury strategy, because one half of the Bitcoin treasury strategy is just holding Bitcoin as an asset on your balance sheet, right? Um, and I've heard a lot of people kind of look at that skeptically of, well, how much skill does that take, right? You're going to find the right custodian, and then you put the Bitcoin in cold storage. Why does that justify a company? Well, I would argue that the skill element in this arena is really on the ability to make good deals in the financing of the company, and then in how to acquire more Bitcoin. And so I think that's where the team shines, top to bottom. We've also brought on, as you mentioned last week, a full board of directors that includes James Lavish and Sharish from Strategy, Ben Workman from Swan, and Ovik Roy, who has also an excellent track record in the hedge fund world. And I won't list them all out. We've got a really full bench of talent. But, I think that every individual on the board comes from a pretty distinctively different background. And so they all provide kind of the mental energy, and a kind of different perspectives that make for a good conversation when we're thinking about, okay, what direction do we want to go in with the company? What kinds of transactions do we want to be a part of? Do we not want to be a part of? I think that one of the really important aspects of running a Bitcoin treasury company is knowing what forms of financing to say no to, and what ways of putting Bitcoin to work to say no to. It's really important to have that kind of risk management built into the company.
Awesome. Thanks for sharing that. It really does seem like Strive has kind of assembled an all-star cast, both on the board and on the C-suite level, and it sounds like below. You mentioned there just, it takes some like real discipline to make sure that you're building out the right suite of products for the company, getting favorable terms for funding. I know Matt Cole has mentioned that Strive didn't come to market with convertible bonds because he felt the pricing just wasn't right. We've seen a lot of these reverse merger or upstart Bitcoin treasury companies come to market maybe with less favorable terms on their debt. How important was it for Strive to come to market with no debt on the balance sheet? And how will that kind of inform how they accumulate Bitcoin moving forward?
Yeah, so I think it's very important to have a capital structure where, when we think about the duration of the asset, right, Bitcoin, we want to hold Bitcoin forever. And so the duration of the financing ideally should match up to the duration of the asset. And so that's where, we look to what Strategy has done with their perpetual preferreds. That, I think, is a much less risky form of financing than other forms of financing that have a maturity date. Now, convertibles are interesting because the maturity date is pretty far out into the future for most market participants that have gotten them. And then it really comes down to negotiating kind of the fine print of the covenants to make sure that you don't have liquidation risk before that, right? But also to look at the interest rate and the strike price of that embedded call option. So kind of aligning those economics. I think that maybe in the past, it was a lot more attractive at times when volatility was greater. And then when you have volatility compression, then the value of the call option goes down. And so the terms just mechanically deteriorate. And so you do want to be mindful of, there is no one instrument that is always the best instrument to use. You have to look at what the current market conditions are, what are investors looking for, and kind of what the pricing is, because almost any instrument out there can actually be favorable for the company to increase Bitcoin per share if the pricing of it is correct, right, and the terms are correct. So, but the goal for our balance sheet is to be able to get to market with a perpetual preferred, and that's the plan. So, kind of keeping the capital structure clean from that perspective of being an all equity pipe transaction along with warrants to kind of scale up the balance sheet and have the perpetual preferred be really attractive on a risk adjusted basis compared to other fixed income opportunities were it to come to market.
Really cool, Pierre. Now, when it comes to a perpetual preferred, that does kind of ring with me that it is a bit of a speculative attack on the dollar, right? Can you talk about that and how it relates to how you've thought about speculative attack and arbitrage and kind of the difference between the depreciation of the dollar and how Bitcoin's scarce properties make it increase in value in time?
Yeah, absolutely. So, speculative attack was a term popularized by Paul Krugman, and he was referring to events that had happened in Southeast Asia, but we could also actually point to events that happened in London. And the one in London is particularly interesting because the person on the ground who was most involved with the speculative attack on the British pound is today U.S. Treasury Secretary Scott Bessent. At the time, he was a hedge fund portfolio manager for George Soros, and so that's a really interesting historical tidbit. What a speculative attack is borrowing in a weak currency to go acquire to sell the weak currency, right, in exchange for a strong currency, and then as the strong currency has momentum and continues to appreciate in value relative to the weak currency, you would be able to cover that trade by selling the strong currency, repaying the loan, and earning a profit. And so really this is actually how currencies, in my view, compete against each other, freely floating in international markets all the time. And I also think it's how they compete against gold. And so we could actually look and model the end of the 1970s as gold's price was increasing rapidly relative to the dollar as a gold-backed speculative attack on the dollar. So ultimately, what constrains a speculative attack is three different kinds of factors. One is interest rates. So what Paul Volcker did in response to the gold-backed speculative attack was raise U.S. interest rates to 20%. Or more precisely, he targeted money supply growth such that interest rates were freely floating and they went up on their own to 20%. So you could imagine kind of, today, interest rates are at between 4 and 4.5% here in the US. And people consider that to be high because not long ago we were at 0%. So in any case, I think it's important to have a perspective that when it comes to monetary competition, interest rates have a wide range to operate within. The second countervailing force against a speculative attack is capital controls. I view what happened under the Biden administration with Operation Choke 2.0 as a form of capital controls, where the FDIC was actually preventing banks from following their rational self-interest and offering Bitcoin-related products. And a lot of banks wanted to be involved in Bitcoin, and they were stopped by regulators, not by market forces. And so that's kind of the second. The third, which we may be seeing the emergence of, is having currency reserves. And so to stop speculators from engaging in this, you have to have a credible amount of hard currency that you could, for lack of a better term, rug the speculators with, right? So where you actually would sell the hard currency, buy back your weak currency, and make the short sellers underwater on their trade. And that's where I think that it makes a lot of sense in the short term that the US has developed a strategic Bitcoin reserve, and that they should continue to build up that reserve so that they have a credible means of defending the US dollar against short-term speculators. But it doesn't really defend against long-term investors who are actually not vulnerable to short-term volatility. What really the US has to accomplish over the coming decades is build up a sufficient reserve so that Bitcoin's trading at fair value, right? Because when we think about, okay, we're going to sell dollars, right, by issuing debt, then we're going to go long Bitcoin. The way that works is that Bitcoin's long-term growth rate, right, the compounded annual growth rate, the CAGR, is going to be greater than the cost of capital. So if the cost of capital is, let's say, 10%, then we have to make sure that Bitcoin's growth rate is greater than 10%. Bitcoin's growth rate, I think, can only sustain that as long as we are not at 100% adoption. If I were to estimate where we are on the adoption curve today, I would say we're probably around 0.01% adoption, right? When we think about not like how many people hold Bitcoin, because there I think we're probably between like 1 and 5% adoption, but really what percentage of global wealth is in Bitcoin? And I think that global wealth, if you count literally every asset on everybody's balance sheet, I think Bitcoin's actually very small compared to global wealth. And so what the US would have to do with its strategic Bitcoin reserve is fix that. They would have to buy so much Bitcoin that it really becomes a material percentage, not just of the UTXO set, but a material percentage of global wealth. Would be the strategic Bitcoin reserve for the US, such that basically every dollar would be backed by Bitcoin. And at that point, the Bitcoin treasury companies, obviously, they would have benefited from the fact that there's a massive revaluation in the BTC USD exchange rate, but it really wouldn't make sense to borrow dollars to buy Bitcoin because you'd be borrowing Bitcoin to buy Bitcoin, right? At that point where every dollar is backed by Bitcoin. And so I think that is kind of the long-term outcome in maybe like 50 to 100 years. And it's going to be a fairly long journey along the way.
Yeah, absolutely. How important do you think the accumulation of Bitcoin through Bitcoin treasury companies and maybe eventually the rest of Wall Street is in sort of signaling to governments around the world that they need to accumulate Bitcoin and protect their currency by purchasing Bitcoin?
Yeah, I think it's critical. I actually also think that it's a signal to individual retail investors who are buying spot Bitcoin for their self-sovereign cold storage, verified with a node setup, that there is a gold rush happening, and that everybody who participates in it will benefit. We're all going to win together. And that, whether it's governments, individuals, corporations, nonprofits, or any other kinds of entities, they need to be a part of that. And so I think that, when we look at the amount of social media engagement that Saylor gets, it's a really interesting question of what, well, first of all, as a social media person myself, I'm like envious of like, wow, what, how do you get like 7,000 likes on an AI image like that? But the reason why is, I think, because he has not only clearly articulated a vision, but also very publicly established skin in the game, right? And brought a lot of other people with him in the form of MSTR shareholders. And so I think that people want to join a team, for lack of a better word. And while, joining Team Bitcoin has been a lot of fun, others, they want to join a team in a more concrete manner of being fellow shareholders, right, with others. And so I think that there's a lot of, the signaling, it goes beyond just to governments, but we also have to look at retail investors and institutional investors. I think institutional investors, perhaps they had their head in the sand as to how much trading volume was going on in CME futures, Coinbase. They got a glimpse of it with the Coinbase IPO. But really, when they saw the speed with which IBIT accumulated assets in its ETP last year, I think some started taking their heads out of the sand because ultimately their goal is to make money, right? So whether that's in the form of fees or in principal investments of going long directionally Bitcoin, I think that there's an increasing realization that these are deeply liquid markets, global 24/7 spot trading, that even if you put aside like the self-sovereignty private keys aspect of Bitcoin, is financially very interesting as a form of collateral and has a lot of reflexivity to it. And so I think that the corporate adoption of Bitcoin has really opened up a lot of people's eyes who manage a lot of capital.
Pierre, I see a lot of people on social media, on X especially, lamenting that we kind of lose something with Bitcoin, maybe some of its self-sovereign principles or libertarian ethos that was kind of built around it in the early days. And you could speak to that better than I, having been around Bitcoin a lot longer than I was. Is this always how hyper Bitcoinization was going to happen? You know, if Bitcoin's for everybody, it's got to be for everybody.
Yeah, so I would argue that those complaints actually predate this wave of institutional adoption. There was always a pushback of people saying Bitcoin is not about the exchange rate, it's not about the coin price. That doesn't matter. One Bitcoin equals one Bitcoin. You shouldn't look at the price. You shouldn't post price charts. You should certainly not make price predictions. And what's interesting about Bitcoin is exactly what you highlighted, which is holding your own private keys, running your own node, using Lightning, having greater privacy than traditional financial system. And my response to that from the very beginning, and when I started really commenting about Bitcoin in public in 2013, it's all of the above, meaning that I believe the financial performance of Bitcoin to the dollar is actually downstream of Bitcoin's fundamental properties from a software engineering perspective, which include the fact that by running a node, you can actually verify Bitcoin's monetary policy, and that without that scarce monetary policy, you wouldn't be able to durably accrue value over time. And so the Bitcoin price would be negatively impacted. And furthermore, that when you think about self-custody, there's no world where we would have Bitcoin adoption based through third-party custody exclusively, right? So, and it's kind of a chicken and egg problem to even think of the hypothetical where that would be possible. So, for example, Coinbase self-custodies, right? So Coinbase has to self-custody their Bitcoin. There was no custodian, they couldn't have gone to like JP Morgan Chase when they launched in 2013 and said, hey, can you custody the Bitcoin for us, right? To me, like even the ability for anyone to ever speculate on the price of Bitcoin by buying it necessitates some form of self-custody by someone somewhere. And so I really see all these fundamentals as a precondition for the Bitcoin price financial performance. And now today, the development of financial products on top of Bitcoin necessarily relies on the historical financial performance of Bitcoin, which necessarily relies on the software engineering fundamentals of the system. So all of this is additive. I think that is expanding Bitcoin's reach, and it cannot undermine the fundamental Bitcoin ethos, because if it does, it destroys everything downstream of that. The financial performance of it would be destroyed, and all of the financial products developed on top of it would be destroyed. And so it's really funny how if you read the BlackRock prospectus for IBIT and what they highlight as the investment case for Bitcoin, and thus buying IBIT, it's that it's permissionless 24/7 global money. So it's, I in a way it's a paradox, because they're not selling BTC on chain, right? They're selling just the financial performance of it, and they're explaining to investors that the financial performance historically has been due to the fact that it's decentralized. And so I think that there's a lot of kind of hand wringing that happens philosophically, where basically the fact that anybody is free to buy Bitcoin does not mean that Bitcoin will be evenly distributed. It's an equality of opportunity versus equality of outcome type philosophical argument. And I think that having the freedom is far more important than having the equality of outcome, and that's a belief I've had for a very long time.
Yeah. That's sound, and you've given me some things to kind of ruminate on there, Pierre. You mentioned Michael Saylor kind of pioneering the strategy in the corporate realm. So if we could just pivot back maybe a little bit to these Bitcoin treasury companies, you've been a public advocate for this. What do you think are some key lessons that companies can learn from Michael Saylor, whether it be Strive or other Bitcoin treasuries, in the ways that he's kind of governed his company and talked about Bitcoin? You mentioned he's a whiz on social media because he's kind of built this following and this educational profile. What lessons can we learn from Saylor, and what can corporations learn from him?
Yeah, great question. So at the Treasury conference last week in New York City, Saylor made a point that really stuck in my head, which was that this is year one of Bitcoin Treasury companies. People will point to 2020 as year one, but in reality, when Saylor first started, it was not about doing any financial engineering on the capital structure. It was just about where to best place $500 million at that time, right? And so it has evolved over time as he learned more. And so I think that on one hand, there's a lot of value from a public company communication perspective to be consistent. On the other hand, you also have to recognize that the company's management and board and shareholders are learning along the way, and they're learning based on price signals. And two layers of price signals. There's the layer of Bitcoin dollars, and then there's the layer of essentially Bitcoin, the company's shares, if you're approaching it, sats denominated. And so the really have to approach it, I would argue, in kind of a venture early stage investor mindset. And one of the nice things about, especially in the US, of investing in public companies is that the SEC essentially subsidizes investor education because they require very in depth full disclosure, which was not the case before the SEC existed, by the way. I would argue that it's actually a very good subsidy and good regulatory framework in order to have the most liquid capital markets in the world, and ones where when people are studying SEC filings, they have a degree of confidence in the facts that are stated in those. So that means that if you're investing in Bitcoin treasury companies, one, you get full disclosure of the Bitcoin source code, right? It's all C++. You can go read through it. You get full disclosure of the ledger in the form of the blockchain that you can verify using your node. And then on top of that, you have full disclosure of the company's economics at points in time, right? As whether it's a quarterly filing or an annual filing or updates that happen in between. And interestingly, today you have the benefit of large language models. So you can feed all of this into ChatGPT 5 Pro with research mode enabled and kind of have an amount of synthesis. And now I don't want to overstate, the power of AI. It can definitely hallucinate. So you want to use it very carefully. But I really think it puts at the fingertips of the reasonable investor a lot more horsepower than they have ever had in the history of investing. And especially because, like, with the Bitcoin Treasury company approach, it's almost easier than for a company whose assets are very opaque and esoteric, right, compared to just holding spot Bitcoin in cold storage. So yeah, I hope that answers the question. All right, I rambled in a different direction.
Definitely. One of the great things I've noticed about Michael Saylor is his outreach to his investors. It's more than just their quarterly calls. He's going direct to market. He's transparent. He said he's releasing the playbook for everyone else to follow as well. We've also seen some kind of organic retail investment communities pop up. There's communities on Twitter. You have the True North squad, which Strive recently acquired. It's kind of fun seeing this community just develop over the last several years since Strategy adopted their Bitcoin strategy, to see the retail investor just kind of come along for the ride and
Yeah,
be a part of the growth story.
I think what that's due to is that Bitcoin itself was a retail driven phenomenon from the ground up, and so it did rely on Bitcoiners directly communicating with each other on the internet at a time where even to buy Bitcoin, like a lot of early Bitcoiners, they had to meet another Bitcoiner, right? And buy Bitcoin peer to peer before solid exchanges appear. And so that retail ethos of transparency and of direct communication, I think not only did it then become, Saylor's approach with how he does shareholder relations, but also I think that it matches up with the zeitgeist that society is in today. There's lots of retail investors that are using apps like Robinhood that are, bringing the investing world to a whole new generation. That it's side by side with, like, you can buy Bitcoin or stocks in the same app, right? So I think that that combined with there's a real hunger for truth, and it's really hard for truth to get through the typical like corporate public relations, publicists, journalists, especially. So the kind of the question marks around journalists' slant or bias has really turned into a desire to have direct communication with the people who are involved with the company. In my case, as a board director, in Michael's case, as the executive chairman. And so that, I think, is where we essentially, as an industry, are, I would argue, ahead of all other industries. And that's going to be to our benefit, which is that we can tell our story better than the media, mainstream media can. At the conference last week, I heard that we were live streaming to 200,000 viewers at one point, which is greater than Jimmy Kimmel's audience. And I found out because obviously, he had a falling out with his show, but I found out that they were like I think that what I heard was like 40,000 live viewers, which is just astonishing that, we just have more viewers than like MSNBC when we do a live streaming Treasury conference like that. So that means that we get to bypass journalists who have a bias. And then, I trust people to make their own minds, right? That we can communicate and that they can then go and take what they heard and compare it to, because on the opposite side, I think it's really neat that the bears like Jim Chanos are also engaging on social media, right? So it's not like you get a one-sided perspective of, this is just the company saying what they want to say. There's also replies, right? So there's pushback. And even on the Bitcoiner side, there's a lot of Bitcoiners who want to ask the hard questions of Bitcoin treasury companies. Because I think that what we talked about earlier is really triggering for a lot of people to say, hey, these companies could financially outperform holding spot BTC. And I think the reason why that is so antagonizing almost for OG Bitcoiners and for even, new Bitcoiners who are really excited about Bitcoin is that there's a real trade-off to say that, okay, if you think that the government is going to come in and seize all the Bitcoin from all the Bitcoin treasury companies, and you think there's 100% probability of that, then you look at it and say, well, okay, on a risk-adjusted basis, these companies are definitely going to underperform Bitcoin because they're going to get all their Bitcoin seized. But if you think the probability is like 0.1%, or, like, assign whatever percentage you want to it, and then multiply it by their valuation and by their ability to accumulate more Bitcoin in an accretive manner and increase their Bitcoin per share going forward, then I think that it really makes it challenging for Bitcoiners to try to decide how they're going to allocate their capital. And the other part of it too is that they can't make this decision lightly, right? Which is that when you're when you're saving in Bitcoin, that's a much easier decision to make, I think, than whether to invest in a Bitcoin treasury company or not. Because for a Bitcoin treasury company, you have to look at a combination of factors, which includes the fundamentals, right? So what's the management team? What's their track record? What have they accomplished? What are they expected to reasonably accomplish over the future? And then you have to compare kind of your fundamental value analysis that includes the qualitative factors of management and the quantitative factors of the financial statements. And you have to distill that down to a valuation number that you can compare to the current market price. And then you decide, is the price greater than the fundamental valuation and the stock's overvalued, or is it less than and the stock's undervalued, or is it somewhere in between at fair value? And a lot of Bitcoiners, they view a part of Bitcoin is that you don't have to engage in these kinds of exercises, and they don't like thinking about finance or valuation, and so they don't want to open a spreadsheet and run the numbers on a company's valuation and risk being wrong, right? So to them, I say, don't just hold spot Bitcoin in cold storage.
Yeah.
That is a a perfectly reasonable decision that I personally am bullish on. Bitcoin's value is going to increase, and simultaneously, don't be upset when Bitcoin Treasury company happens to outperform Bitcoin over some time window, like MSTR has over the past, let's say, 18 months. Right? Just accept that you were not interested in that transaction at the time. You continue to not be interested in it, and you're happy for the shareholders, and that you're happy for yourself holding spot Bitcoin, right? Like, it's a very, I think, unhealthy attitude to have of kind of being bitter towards what others have done because you didn't want to be a part of it back then or going forward.
Yeah, I think it's nothing new within the Bitcoin community. Even though it's a niche community, there is a lot of tribalness, whether it's on technical aspects or how people should store and hold their Bitcoin, or whether or not governments or corporations should buy Bitcoin. But yeah, it's like we're free to make the economic decisions that are in front of us. You kind of touched on.
Quickly
Go
butt in
ahead, Pierre.
with the tribalism, because I think tribalism is good, actually. I think it's a way of getting the arguments onto the table. And in high school, I was, on the debate team. I love debating. And so I think it's very healthy that we have these debates. And so I don't want to discourage anyone from expressing their perspective.
Cool. Absolutely. And I echo that for sure. You kind of mentioned about Bitcoin treasury companies and how sentiment reflects the value of the company. Right now, we use mNAV to kind of capture the premium that a Bitcoin treasury company is trading to their Bitcoin that they have on their balance sheet. Sentiment right now is a little low. And what do you attribute that to? Is it the choppiness of the Bitcoin price? Just we're in a season where people don't have extra capital to invest in Bitcoin companies. What are you thinking about mNAV and how that relates to the investment opportunities?
I think your remark about spot BTC USD is correct, which is that you could model NAV as a very, very loosely a function of upside volatility. And that really, when you look at any kind of closed end fund, when mNAV is greater than one, what the market is telling management is that they need to issue stock to uh, accrue more assets, and that there's investor appetite for what management's doing. And so that does create an obligation on management to execute on issuing more shares to accrue more assets accretively on a per share basis. And I think that um, management actually has very little control over the mNAV, is the perspective I have, which is that, to me, mNAV is an input into decision making for management. It shouldn't be an output. The output, I think, is twofold. Um, One, long-term value accrual. So for all the shareholders. And so what does that look like? Bitcoin per share. And two is looking at what are all of the different tools available to management in order to accomplish that outcome, and using them judiciously so that in any kind of environment, we're continuing to push the ball forward, continuing to create value. So right now, where we are is that the combination of uh, one is, I think, a bounce back from where FTX was, right? So I think that FTX caused the Bitcoin price to go lower than it should have, 17K, approximately 2.5 years ago. Two, then we had the ETFs come out, and that started another leg up. And then three, President Trump's reelection, and that started kind of another leg up. At this point, I think that we're in a very strong consolidation phase where, look, a lot of people made life-changing money going from 7K to 100 plus K, right? 124K was kind of that little top. Um, and so anytime you have that kind of price appreciation, people who made a life-changing amount of money are going to make life-changing moves, right? They're going to rebalance their portfolio. They're going to, buy a new house, buy a Lambo, or what I encourage them is to donate to their favorite causes and to help everyone out. And so I think that that's completely natural to have that kind of consolidation, and that suppresses volatility. And that, I think, compresses mNAVs. The other thing that compresses volatility, which is a good thing, by the way, is that the Bitcoin treasury companies are buyers in good times and they are not sellers in sideways choppiness. Sometimes they're buyers in sideways choppiness, but not necessarily all of them, right? Because of that mNAV compression, which kind of limits the tool set. But that, I think, is really great for Bitcoin because now, even when, for example, last week on Monday, Naka was down 50%, that didn't impact the Bitcoin price. And so I think that we can see Bitcoin treasury companies as being a shock absorber in some regards between retail sentiment and the Bitcoin price because they are able to hold through share price volatility. They're able to hold Bitcoin. And so I think it kind of goes against this uh, meme or narrative that was circulating earlier this year that Bitcoin treasury companies are going to cause the next bubble. They could prevent the next crash, right? So I would argue that's far more likely, which is that when we see large whales dumping a lot of spot Bitcoin, then we see treasury companies accumulate a lot of Bitcoin, and so I think that it's actually a really healthy phase we're in. It's not going to last forever, right? Eventually, the sellers are going to run out of coins that they're happy with how much they've sold. And then you have to think about, somebody with a cost basis of $110,000. What's their exit price? Maybe it's 200,000, maybe it's a million, maybe it's 10 million. Just depends on kind of what their holding period is and what their future goals are. But I think that Bitcoin's also on a different cyclical drumbeat. We saw with the halving, I would argue, not really a huge effect on Bitcoin's price. I think that the catalysts have been elsewhere because the halving is frankly immaterial in terms of trading volume. The new issuance of the subsidy at this point compared to the liquidity and CME futures, iBid options, MSTR options, right? All of the markets are giant compared to the daily issuance of new Bitcoin through the mining process.
Yeah. To that point, Michael Saylor has famously said that Bitcoin winter is never coming back. I wonder if you kind of share that sentiment because of the liquidity and I guess the bullish signals and the size of the market. I think what he meant by that was that he didn't see 75% to 90% protracted bear markets like we've seen over the historical 4-year cycles. What's your take on that? And also, I guess tag on that. What would a Bitcoin treasury that fails in a bear market look like?
Yeah, great questions. I think that on top of the factors I've pointed out so far, I would add on the dollar side that we are entering into a easing cycle, not a tightening cycle. And so that's very different from the previous bull market where, towards the top, we entered into a tightening cycle because of the too much COVID printing, right? So I think that that's a huge tailwind that makes me when I look at like the probabilities of future prices, I think they skew upwards rather than downwards. The failure of a Bitcoin treasury company, I think what it would look like is that let's say hypothetically in 2 years, like Bitcoin goes to a million, or let's say $2 million, okay, at the end of 2027. And at the top, you have uh, Barack Obama launch his Hope Bitcoin Treasury Company. Okay, and that as part of that transaction, it's like 75% of the capital structure is in perpetual preferred shares that are paying a 4% uh, dividend rate, right? And then Bitcoin crashes to like $300,000. So at that point, the whole structure is underwater. And in order to make the dividend payments, this hypothetical Obama treasury company has to issue more common stock. right, and hyper dilute the common stock. And that at that point, you hope that the preferreds have governance rights in order to essentially recapitalize the company on a rational basis, because the company would quickly lose the ability to sell common stock to pay the preferred dividends, and so then the company would be in default on the preferred dividends. And at that point, either you properly recapitalize the company or you go into liquidation, right? And that they would have to liquidate Bitcoin and to pay out whatever, outstanding obligations there are to the preferred stock. And so I think this highlights a few things. One is that you want to be careful about your leverage ratio and look at where you are in the market cycle, right? With clear eyes. If things are clearly overheated, which I would argue that $2 million in 2 years would be clearly overheated by any kind of, different technical and fundamental analysis. I may be wrong, right? Like if the Federal Reserve is printing dollars to buy Bitcoin at an aggressive rate, maybe $2 million is just like undervalued at that point. But in any case, my point is that management and the board, they have to be looking at what's the risks that they're underwriting with the leverage, and they have to keep the leverage appropriate to where they believe to be in the cycle, but also just in general, right? Have some hard rules about, even in the best of circumstances, here's kind of where we want to be at with a leverage ratio, so that the investors understand that this is a long-term play, right? This is not some kind of short-term, attempt at timing the cycle. And so being able to survive with a capital structure through a bear market is really important. So yeah, I hope that answers the question of what the failure would look like. But using purely a hypothetical, not reflective of any existing Bitcoin treasury companies. If you look across the industry, I'd argue that broadly speaking, the industry is undervalued, or sorry, not undervalued, underleveraged. Underleveraged, meaning that if you look at the ratios, MSTR is very conservatively leveraged, and that you could actually. Okay, so this might be a source of controversy for MSTR shareholders and for any other shareholders out there in public Bitcoin treasury companies, would be that a risk is being underleveraged, right? That going into a bull market, and so I think that there'll be more education needed in the credit markets for us to get to the correct leverage ratios as an industry.
Thanks for the insight, Pierre. Before we wrap, tell people where they can find you and follow along with your analysis and where you talk about Bitcoin.
Yeah, of course. So first, SEC filings, right? So I think that that's where people should get their primary source information, not social media. And then follow me at Bitcoin Pierre on X. And I also host the Bitcoin for Corporations show with Bitcoin Magazine and the Bitcoin for Corporations organization. So go check that out. And yeah, thanks for having me on, Tyler.
Great. Thanks, Pierre. And one thing we have our guests say before they leave is stay orange.
Yes, stay orange.
All right, ladies and gentlemen, Pierre Rochard.